Welcome to Master Your Finances. Interested in the thought process of students finding their paths in the business world? Discover how they embarked on a journey to create their own venture capital fund. Meet Abhijay Edavalapati, a senior at Bridgewater Raritan High School, who serves as a venture analyst at 1435 Capital Management, evaluating growth stage companies and aiding seed stage startups in due diligence. Also serving as a regional vice president of Future Business Leaders of America, the largest business career and technical student organization in the world, Abhijay is a dedicated leader shaping the future of entrepreneurship. Joining him is Rithanya Senthilvel, a junior at West Windsor, Plainsboro High School South, also in New Jersey. Fascinated by descriptive statistics and private equity, she serves as the president of her school's Future Problem Solving Program International Chapter and works as a venture analyst at 1435 Capital, involved in due diligence and report writing. Today, they will share their journey in establishing the Homeroom Fund, a venture capital fund co-founded with Andrew and Akash. Together, they encourage investing in today's youth and expanding opportunities for students eager to explore their respective industries. Don't miss this inspiring conversation where students embrace their venture capital vision, igniting hope for future business leaders. Now, you guys are just a little bit younger than the average venture capitalist. So do you want to talk, you're both actually still in high school, right? So you want to tell us how old where are you at?
Just a little bit. Well, I'm actually 17.
Okay.
And so I'm a senior at Bridgewater Raritan High School.
Cool.
And I guess we both had the amazing opportunity to be part of this internship, which actually allows high schoolers to be able to get a step foot into venture capital. And so what that's allowed us to do is it's allowed us to see different people who've had tons of experience and actually learn from them and really evolve and absorb their knowledge.
Yeah, I'm 16 and I go to West Windsor South, and I definitely would think this is like an opportunity not like any other. Meeting all these people with these like crazy ideas, and you think like, how did they come about these ideas? And going about the actual product and just hearing their business plan and everything, it's like, wow, it's truly eye-opening. And we're super grateful to Ben for providing this opportunity for high schoolers.
Well, that's just awesome. So, what did you guys first get in venture? I mean, you guys are still in high school. Most people don't know how to write a check in high school, frankly. And you guys are already kind of moving onto the high end of the investment world, which is the venture capital world. Those are kind of the gals behind the scenes that nobody really knows about, that just makes things happen, right? They supply the funding for a lot of these things that everybody's like, wow, they're changing the world. That comes from these VC companies, right? At some level. So at this age, what got you interested in this initially? Why are you here? I mean, this is fascinating.
Yeah, of course. So I can start us off. So I think that for me, when I first saw this internship opportunity with Ben Jen, who actually leads the internship with 1435 Capital Management, I think that something that brought me together is really the mentorship that he would bring with tons of experience in both creating his own startups as well as working in venture capital and private equity. I realized that I wanted someone that I could look up to and someone who I can absorb from their experiences in the past so that I would be able to do the same things or maybe emulate something like that. And so that was my main step foot in. And each day that I'm in the office or even like writing a report, it's just shown me more and more that I really am interested in this field and I really want to expand my horizons, especially after college or maybe even like next summer.
No, that's awesome. But I mean, how did you think to look for a venture capital internship?
I think I kind of heard a little bit about venture capital through Shark Tank and
Shark Tank. Oh, there we go.
Yeah.
Get Shark Tank credit for this one. Okay, good. Okay.
Yep. And I know my dad has always been really fascinated in finance, and he's always been the first person to show me what it's all about and what it really means to work in private equity and venture capital, even though he doesn't work in that itself. So when I saw this opportunity, I was like, wait, this is not something I've ever seen before, especially for high schoolers. And I think this all really came back to my dad, and he's the one who got me.
Awesome. So your father exposed you to this initially, right?
Yeah. So my step foot in was actually pretty interesting. We mentioned in the beginning that I'm part of Future Business Leaders of America.
Right.
And so actually when we were initially marketing, when they were initially marketing the internship, my FBLA advisor or Future Business Leaders of America got a flyer with the actual opportunity, and he showed it to everyone because we're all immersed in business. And really it was Future Business Leaders of America, the club, that allowed me to really explore this field of business. And so with that flyer, I was able to get more and more knowledge about venture capital, and that's really what struck my interest and made me come here.
So you guys, well, you're definitely interested in business because you belong to the venture. So you're more interested from the business perspective and how it gets funded, or are you more interested from the funding aspect and as an investor, right? So which, or both? I mean, tell me like what really gets you excited about getting up and coming, because there's a lot happening here.
Yeah, of course.
What kind of gets you excited about coming in?
Yeah, I think it's a mix of both. First, on the one side, the fact that you can see these great people with like different innovations that you would never even think of in your like wildest mind, but it's also you get to see like investors and like their perspective, like how do they go about in investing in a fund or in investing in a product? What are like the ideas or the due diligence process that comes with that? And it's just when you see things like, or like shows like Shark Tank, you only see like the outside perspective, but it really jumps you into like, what is the thought process? What is each and every individual thing that's going on in their mind to be able to make a deal?
Cool.
Beyond these companies, these are like the Apple and the big tech of tomorrow, and seeing that we can be a part of the process to aid these companies to expanding, growing further, and, even assisting them in their day-to-day things, and just, they want some feedback on their product, and, in that due diligence aspect, we get to be a part of helping create the companies of tomorrow. So that's just like a super, once again, I think I've said this a couple of times, it's an eye-opening experience, especially at our age, to get that type of opportunity and see what goes into, making a product, pitching it, getting people behind your team,
No, it's awesome. I mean, that's one of the things that differentiates, I think, the United States. I mean, we're big on startups and really maximizing and causing impact, right? So this is what you're talking about. Is how do these creative people, inventors and things like that, how do you get them from that great idea all the way to the point where it's actually out in the public domain and it's a usable product and everybody's actually benefiting from it? Like you mentioned, I mean, iPhones, 10, 15 years ago, nobody knew what the darn thing was, right? Who wants to put a brick in their pocket and listen on it, right? Right. Well, now we're like, nobody can't get rid of it. We rely on it every single day. So once you got the news that you're going to be there, I assume you're a little bit excited, right?
Of course I was, yeah.
Go
ahead.
I actually got the offer on my birthday, so.
Oh, that's awesome. Happy birthday, right? So once you got the offer, so what kind of happened next, and what was your experience at that point?
Yeah, so immediately after what happened is that we started with an initial demo. So this is more of a summer internship. So when the school ended, we really got an informational session on first how to write reports, and then an introductory lesson into the idea of venture capital as a whole. Because the nice thing about this internship is it allowed us to go from someone who isn't that experienced in the actual industry to someone who has the nitty-gritty details. So we went through information lessons, learning about things like the J curve, which allowed us to understand what goes on so that in the future, right now, when we're starting our own fund, we know what needs to happen in order to invest in a company.
Okay, so tell us what the J curve is.
Yeah, so the J curve is actually something that is in venture capital. And it's essentially what that means is that in the initial years, when you're actually focusing on investing in a company, you're going to see some downturn or some returns aren't going to be as ideal. But as time goes on, it maximizes over time. So you could think of it as a nice J because it goes down at first, but then it rises up exponentially near the end.
Okay. As opposed to a U, which you're not going to make any money.
Yeah, exactly.
Especially with early stage, since
right.
1435 focuses on a seed and early stage companies. You see most of the revenue and even the profits are going into investing back into the company and how can we grow this further. So that client acquisition and you see that that's where the money's going towards. But once they become profitable in the later years, you see higher returns and always high risk, high rewards. So with the earlier stage companies, you can definitely see bigger X returns as opposed to investing in growth stage, which is also what our fund specializes in.
Right. So you guys have the earlier stage ones, right? And then you have the growth stage ones, right? Mm-hmm. So you split between the both of them.
Yeah.
So you guys were definitely so when you get involved in the investing, so you talked a little bit about how you do the analysis. So when they first came in, they took you through kind of a demo, you said, and then
right.
So talk to a little bit about what they taught you during the demo and what you learned during that process as far as what you're looking at and what you're going to do next.
Yeah, of course. So I think that something that we first realized is one of the initial lessons is that it's kind of like a game of ones and zeros, right? You need to think of an entire company as just ones and zeros rather than thinking about the money that goes into it, really focusing on what the company has to offer and to make sure that each company first they have a viable product, something that makes them unique in terms of differentiates them from their competition. And third, a really big emphasis on team as a whole. because those three things, those like three pillars come together to create a good company that is going to go through the J curve and make high returns. And so when you think about investing money, I think the important thing is to not really think of it as money, but to understand, is this something that can actually have high reward or high risk? And then go into that with that sense of mind before going into like a money oriented mindset.
Okay.
Yeah, and adding on to that, when you're investing in a company, you're investing in the people behind it. You're investing, in their ability to, especially like open-mindedness. I think that's the biggest thing that we're looking for when we get on those founder calls. And also looking at the company beyond its quantitative aspects, like, is there a market for this? Because a lot of people have these great ideas, and even if it's like, oh, there might be a niche market and they might be interested in getting acquired, looking at them as a whole and as opposed to just like how much revenue are they making, how profitable are they, looking at product and revenue streams, like how they're getting their money, the technology behind it, where their competition is, where, even like where they're located out of, who their niche market is. So looking at them as a whole is, I feel like, the key part of analyzing a company.
Yeah, so you have a lot going on here. So we're definitely going to get more into this. We're going to take a quick break. You're listening to Master Your Finances. We'll be right back. Welcome back. You're listening to Master Your Finance. I'm here with Abhijay and Rithanya, and we're talking venture capital, and we're talking ones and zeros, which is interesting to me. So I guess, one, you want to explain a little bit about what the ones and zeros mean? I know what a computer is, and but you kind of, how did you mean that? Do you want to extrapolate on that a little bit?
Yeah, of course. So I guess the idea between this ones and zeros is it's kind of like you can take it back to like gambling in a way that when you gamble, you don't think about the actual like the money that goes behind it,
right?
But rather the technique and the strategy that goes in front of it. So if you really think of like whenever you're investing into a company as ones and zeros, first of all, you take out the whole emotional part of it out of it. And that's so important when you're investing in a company, because as Rithanya mentioned, you really want to look at the overall company as a whole rather than bringing your emotions in. And especially, we talked about the J curve, right? You're going to lose money in the beginning. You don't want that to really cause you to leave the actual company before it gets massive returns.
Understood. So, and then you mentioned after that, the three different areas that you look at, right? Mm-hmm. Is it viable? Right? Correct me if I'm wrong here. Viable, unique, and looking at the team as a whole. So let's talk about each one of those a little bit. So how do you guys go in and determine whether or not this particular company happens to be viable?
So kind of seeing once again, like what's the market that they're targeting, and is there really a need for this? The big thing that a lot of companies are doing, is market research, seeing, hey, what is like a need that is currently in the market? How can I address the need? So sometimes creating a product without a certain need in mind, or without targeting a specific need, right, that kind of, it's just like an excess product. There's not a lot of people that be willing to buy into it, And the biggest thing is like, are they scalable? Are we able to, make it bigger, attract other audiences, and then, grow out from there. And if we don't really see that potential, that's either something that we want to like talk to them about and see like where their thinking comes behind it. Because of course, we're not inside their brains. Are they effectively also able to communicate to us, why would we need this product? Why would their target market need this product?
Yeah, and so I guess going more onto that, it's also thinking about whenever you're starting a company, you really want to do as much feedback and research as early on as possible, especially because you really don't want to get to a stage where you're pouring money into a company that's basically useless. And so what that means is by doing all of that viability test early, you're essentially, if you're like an entrepreneur starting something new, you can ensure that you're thinking of making a change early on, so that in the end of the day, you see rapid prosperity and like rapid success in your company.
And the due diligence process is more not just for the investor, but also for the team behind it. How are other people's how are other people able to use the product? Is there like technical issues on there? And we can provide feedback in that way too. We're more than just people that are like give you money. We can also be part of the process of creating the product.
Well, that's an important thing that venture capitalists tend to bring expertise, because they tend to be investing in entities that they're very familiar with, right? And which is very helpful, right? Yeah. So once you determine it's viable, so you're talking about the actual product and the research. So you're running some numbers. You both had statistics in there somewhere, right? Yeah. So tell us a little bit about the numbers that you're running to make sure that it's viable. Like what are you looking for as far as the numbers go when you start seeing, because you mentioned the J curve. So when they're coming to you, what do you look? What are some good and bad things you might see in the numbers that maybe concern you, or things that make you feel a little better?
Yeah, so usually for context, so what happens is when a company or like a company's pitching, they usually bring on a slide deck or a deck with all of the information about the company. So within that slide deck is something called financials. And the main things that we like to see, or we think is the emphasis, is first like revenue, right? Do they have a unique proposition that's allowing them to beat their competitors and making money? But also, how much money have they already poured into the company? Because look, if they're putting like a lot of money into a company and not seeing proper returns, that's an immediate red flag from an investor's point of view. And third, also thinking about where is that money going to and which channels it's going to see that is the like CEO doing something right? Because we already mentioned like how important the team is. And if the team is doing something that's, I guess, putting them, or are they willing to learn from their mistakes and how they've made a change accordingly?
Yeah, we also look at like previous funding rounds, and once again, like as Abhijay mentioned, like what channels are they investing their money into? Are there ways that they can cut back expenses? And how long have they been in business? You know, for an earlier company, and like, you know, seeing how much experience they have, are they willing to, you know, learn and like take feedback on like, hey, maybe, you know, we're putting a lot of money in here that we don't need to. Maybe we don't need to hire this extensive of a team this early on. And, you know, seeing where that capital is being allocated, because essentially in the end, it'll be our capital will be allocated.
Right.
We want to make sure it's going to the right places with the right people.
Okay, so it's important to run the numbers and make sure they're like being good fiduciaries on what's going on so far and actually analyzing it well. No, it's all very important. Yeah, people underestimate the value of the financial side, because it does make a huge difference long term. So we get into the financials. So okay, let's assume I'm a company that looks like I'm doing all right so far. I've been investing okay, and you're getting the expected returns or maybe the expected losses, because as you mentioned, there might be some losses because you have investment sides going in and you're still developing it and things like that. So what about the unique side? So how do you determine whether or not it's unique enough? Because I can come to you and say, well, this is unique. I painted it purple. Yeah. Right? I mean, then you go, well, it's the same thing. It's just purple. Right. So what do you do to kind of figure out whether you think it's unique enough to make sense?
We also try to look at like how many goods have already been sold, which channels they're, you know, selling it through, and
I think that the number one thing when you think about uniqueness is like sales, right?
Okay.
Because when it comes to sales, you have to realize that the only way, as you said, you can see if something's unique is really if it's been tested in the market and if the people want it. Because if you're giving something that the people don't want, then there's, I guess, no point of the company as a whole. And so another thing along with sales that we look at is technology. Do they have a unique sort of technology, like a battery or something like that makes them different from every other competitor? And also, when you think about the technology, you really want to think about efficiency. We're in a rapidly growing like innovation market right now. And so you're going to see multiple innovations, but the ones that really set the others apart, or the ones that really shine a bright light, are the ones that are efficient in their own way and that can make a change to a problem that's already in the market.
And a big buzzword right now is AI, right? But we want to see how are you leveraging AI? What are you doing with, you know, artificial intelligence that's different than other companies? And maybe it's not that you're so unique, but it's maybe how are you doing, like, how are you providing your product or service better than your competition? Is there something that your competition isn't addressing that you want to address through your product or service? So yeah, once again, it's either unique or how efficiently are you addressing the need in the market?
And that has to be challenging. You just mentioned two things that are really, to me, hard to research in a timely manner, because when you're dealing with uniqueness, I mean, you have to research the market, which is constantly changing. So how do you make sure you're getting the most current information on the competitor, quote unquote, right? Because everybody's trying to innovate at the same time, right? We're all out there trying to do stuff. So you might say, well, we've researched these 10 companies, and then all of a sudden maybe you missed one, and maybe they're doing something similar. So how do you kind of make sure you're capturing their market? And so where do you go to find these sources to see where their competitors might be based on what they currently do?
Yeah, so one of our responsibilities as an intern is actually writing due diligence reports. Mm-hmm. And so in those reports, we go from everything from market overview to financials. So we look at a variety of websites and sources as a group and as a team with all the interns together. And so what that allows for is that when we provide different sources like Crunchbase, it makes sure that we're having a diversity of sources, which allows for credibility. And as you mentioned, if we forget something, one of the sources is going to bring it up so that we can make sure that we get a comprehensive overview of like the market or the product as a whole.
Okay.
And usually in a good company, they'll also address like, oh, these are our competitors, but this is how we're doing better than them, you know? And if they're able to address that, we already know that they're not scared like, oh, we shouldn't put this in, or then we'll put the idea in their mind. We know that they're aware of their market and they're aware of the market they're entering into, which is like a huge like green flag for us when we're looking at
Right. So obviously you hope that the company's already done some of this, but you want to kind of check their work, so to speak, right?
Yeah.
Is what you're kind of doing.
And since we stay in like the spaces that we're really familiar with, we also, you know, hear these names, and, you know, a lot of our portfolio companies, they stay within specific sectors. That's why investors try to stay in like markets that they're like familiar with.
And also, like, part of it comes down to like experience, right? Because like as we've been venture capital interns, I know from the beginning of the summer to now, I can have a much more like understanding of the actual company, like in the first like 20 or 30 seconds by looking at what is the problem, what is their solution to it. And
Right.
I think that's the nice thing with this internship, right? Is we're getting as much exposure as possible so that we're able to make those decisions like in a timely and quick fashion, which would really help us with our own venture capital fund, homeroom fund.
Yeah, that sounds great. So you got a couple things going on here. So the analysis. So what do you think you've learned that helped you to like really figure that out quickly? Basically, experience on seeing many different
Right.
scenarios, and you start to get amass that knowledge. So of all these you're looking at, I assume you have quite a few companies you looked at so far. How many of those kind of filter through? You say, yeah, this is something we're kind of interested in. And can you describe that process a little bit, like when you see these different companies?
So usually we have like a funnel that we go through. So
Okay.
of course, as interns, we're also attending all these pitch events, right? And
Okay.
after seeing like hundreds of people pitch all the time, you know, we kind of have a good indicator of like, oh, this is someone we're interested in. This is someone that we may be, but we may have to, you know, schedule another call and follow up. So
Right.
first, you know, we view them at these pitch channels, right?
Right.
And then after that, might reach out and be like, hey, we'd love to have a further call just to learn a little bit more. If you could provide us any sample financials, okay? And also with that one-on-one call, you get to hear a lot about the team and like the character of the team, you know?
Right.
Are they open-minded? How has their history been with, you know, their financials and the money, the capital that they've raised? And that's also a really big indicator. Once again, those founder calls are more than just looking at your pitch deck. We're looking at you as a team.
Right.
And yeah, and so to go back to answering your question as well, I think that most of the companies that we actually look at are going to get shifted out in the first stages when we actually look at the pitch events. And so what we do is after all of these pitch events, we all come together as a team and we talk about the companies that we thought were interesting or that had something unique, fill those first two boxes. And based on those two, like the companies that we see, which are a very few amount actually,
Right.
we're able to go onto one-on-one calls with their founders and really ask them questions and really nail it down to see, are there any problems with the thing, or are there any competitors that might be doing the exact same thing?
That's just awesome. We're going to take a quick break. You're listening to Master Your Finances. We'll be right back. Welcome back. You're listening to Master Your Finances. I'm here with Abhijay and Rithanya, and we're talking about the different areas that they look at, the three areas that whether the company is viable, right? When you're analyzing a company for venture capital investing, whether it's unique, which we talked a little bit about, and how you research. They'll provide you some of their competitors and how they think they're going to address things that maybe the competitors aren't addressing, how it's going to be better, and things like that. And then the last part we talked about was the team. And I kept hearing that come up even when we were talking about the other two aspects. So I'm going to take a leap of faith here and say the team is huge, right?
Yeah, you hit it right on the dot. Yeah.
That's been my personal experience too.
Yeah.
It's the people, right?
The people. It
Yeah.
all comes down to the people.
Yeah.
And I think that in terms of the team, when you're talking about the team, like we all make mistakes, right? The whole part of entrepreneurship and making a startup as a whole is realizing that, okay, there's going to be problems to make a mistake. But I think the number one thing that we look for in a team is, are you willing to learn? Because at the end of the day, again, we all make mistakes, but if those people who are ready to take the changes and they're ready to adapt from their company, even if it might be a complete shift, are the ones who are going to be the most profitable. Because as you mentioned before, all of these like people who are investors have years of experience and they've seen what's worked and what's
Right.
not worked. And so if someone in a startup is just not willing to learn or not willing to take that information, that's an indicator that it's not going to grow and it's not someone who you really want to work with and who's someone who would really, I guess, get the most out of the experience.
Yeah,
Right.
we've met teams with like decades of experience, but they're really like set on their ways, and they aren't like willing to hear other perspectives. And especially, the economy's been crazy the last couple of years, and not being able to adapt to that, or understand that, oh well, now we're in a different time, so now we need to adapt to what's coming towards us. And if we're not ready for that, then your business is going to take a hit. So that's another thing.
Right, you better adapt. You're not going to survive.
Exactly, survival of the fittest.
Talk to companies like Sears and Sears versus Amazon, right? Sears should have never let Amazon take over, and they own the segment, right? So what do you? So you mentioned another thing which came, the AI is, to me, is very interesting with a couple of perspectives, because one, it's a technical thing, but it's also something that's changing extremely quickly. Mm-hmm. So how do you address, because there's like almost no lag time happening here. It's like it's kind of crazy how quick this is happening. So, and I know this is an area you guys should tech. So what do you guys look in? Because everything's AI now, right?
Right.
No matter whether it is or it isn't, right? You buy an ice cream cone. Oh, I got AI in it tonight. Yeah, ice cream cone. You just seen how we made this thing. So, yeah. Right. So what are your thoughts about how that's headed? Since you guys are gonna be living this. You're young, so you're gonna see this whole thing play out. Yep. Right. So what are your thoughts about it now, and how do people invest in it now?
I think that the important thing to understand first with AI is that AI is really being thrown out there like space in the past, how it was big on all space, but now it's AI. So something important to understand is that not everything that is AI is actually AI.
Right.
And it just they just throw the buzzword, as you mentioned, just to do it. But I think that, again, going into the ones that are actually AI, I think that's really important to understand with the technology. Because when you invest in a company, you really want to make sure that you understand the company as a whole. And even if you don't understand something as small as the technology behind it, that can be really detrimental in the future. And I think that once we find a company that has a unique thing with AI and is something to learn, I think that would be a great investment opportunity for us as well as the entire world, because of how automatable it is and how it's able to be expanded to different horizons and different, fields, so that it could provide relevant changes.
Mm-hmm.
It's definitely been integrated in many sectors, but I know another concern a lot of people have is the privacy that comes with it, Right. So does this company just by saying, hey, we're leveraging AI, are you able to address the privacy concerns that might come with it, especially in technology? Are you where's this data going? Because that's a lot of the things that customers are wondering. And while AI is a big thing right now, in the industry overall, there are people that do have those concerns. So how are you addressing those concerns also? And what really is your AI really a competitive advantage? Is it really setting you apart, or are we just using it as a buzzword? That's also a big thing that we see.
Right. And that has to be pretty challenging to analyze. Just from my perspective, right? And it sounds like it's very challenging, because people talk in technobabble all the time, right? And it's kind of like, oh yeah, it does this, it does that, it does that. But how do you really know? Would they demo it, or they show you how it's actually working and what it's doing? I've been on ChatGPT and all that stuff. It's an interesting place to go. But when these other companies say, well, here's the things that we're developing, it's going to have such a quick runway, right? Some of this stuff.
Yeah. So, especially, sometimes we do product testing. So, just trying out the platform. And then once again, since we are based in tech, or not based, but it's one of our main primary sectors. We have seen other companies use AI, so then we'll see we'll compare companies. While it may not be apples to apples, we have a relative metric to compare them against, and also. Yeah.
So in summary, right, experience is the name of the game. When thinking about things like AI or technology based, you really need expertise in the field, and that expertise comes from not only an education in the field, but also B, having past opportunities or experiences looking at what an AI company has done and how, if they're following the same framework as a past successful one. Because if there hasn't been a success in the past, then that shows it's not efficient in the current realm, or it's not applicable to this current field.
Mm-hmm. By overwhelming your investors with technical jargon, that's not really going to, come off as impressive, Right. So understanding your investors' background and seeing how much do they know, and, trying to get on that level and explain to them. Because if they're overwhelmed with information, they're not likely to invest in you because they don't know what they're investing in.
Right. Yeah. Don't confuse. A confused mind says no. Right. So you don't want to confuse somebody. So once you go through this whole process, so what are some of the interesting dynamics you've seen with some of these different investors that the companies you've been talking to?
I think the funny thing is that we see like everything from one one spectrum to the other. We've seen people who have had great products, but just have had a team that's not willing to learn and not willing to be able to take our expertise or knowledge in the field. But we've also seen great founders who definitely have a passion and who have a passion in the field, but their product isn't just up to standard. And so the thing about this is that that's kind of like, you want to meet that perfect medium or that like equilibrium when actually investing in a company, because it's the companies that are having a great team as well as a great product, and not a great product as like, I think this is the best product in the world, but something that again is unique and also it's relevant to the market as a whole.
Mm-hmm. Especially with early stage companies, but sometimes they don't have as much experience.
Right.
So, do they want our help in that like kind of consulting aspect? Do they want to hear a little bit more about how to expand their product, scalability, client act? Like, do they want to hear that input from us, or are they just looking for capital?
So how does that part of it work? You're talking about how because we talk, VC people tend to have experience. They bring the experience, not just the cash, right? So you want to talk a little bit about how that interaction goes with the founders and things like that?
Yeah, so usually I guess it would be more relevant to talk about a one-on-one call with an investor. And so what happens is that they usually provide a brief overview, again, just like summarizing what they were talking about in their pitch. But then we really go into the details. Like if, for example, Rithanya was talking about AI and the safety concerns. So we would ask questions like those to spark a discussion with hopes of like seeing what problems we can find with the company. Because again, our hope is that there's no problems, but we really need to immerse ourselves into the product as a whole to get a proper understanding. Is this viable or not, or does this have problems or not? Okay.
It's also a big part of, risk analysis, that's definitely something we need to, while it might not be a problem, we need to see, are we willing to hedge that much risk? Is there any way we can mitigate the risk a little bit and, help them in that way? So, yeah.
And that's something we're especially noticing because we're starting our own fund now, which is essentially high schoolers being able to get into venture capital, and we're trying to bridge that gap. And so one thing that we have is, look, we have experience, but we really need to see, without someone, I guess, overseeing every single aspect of it, how are we approaching the nitty-gritty details and looking at each company and how they're like interacting with a high schooler rather than a regular venture capital investor.
Right. So let's talk about that for a minute. So how is it to have these co-founders and I call you up and they go, well, yeah, I'm a sophomore in high school, and I'm going to tell you how to run your business. So how does that conversation go?
Yeah, it's definitely like hard in the beginning because you like don't have that credibility. But the nice thing that we think that we provide new to the entire venture capital space as a whole is, first, we provide the high school aspect with experienced oversight. So that means high schoolers are more willing to take risks. They're more willing to take changes. So if you see that next Apple or the next future company, a high schooler is more willing to take that risk rather than, I would say, an experienced investor. But at the same time, we have someone like Ben, who is our managing partner, looking over every deal that we make. So if we're planning on making a deal and it might not be as applicable with his experience, he can stop that from happening, and so that we get that perfect balance between both.
Yeah, Ben has also assisted us a lot in the legal process, so we know all the agreements that need to be made. And, there's always there's kind of like a spectrum, people that are definitely like, the nice middle is people that are definitely willing to, pitch to us and take us seriously. But there's always people that are like, oh, what do high schoolers know? They probably don't have too much experience. And then there's another end of the spectrum that's like, oh, they're high schoolers. They'll probably give money to, anyone that pitches. Exactly. So trying to be like, well, that's not actually true. We have like a due diligence checklist. We have a process that we go through before, deploying our capital. Because essentially all these investors, they're counting on us and our management team to, create returns. And so we can't just, give our money to anyone that pitches.
Right. It's awesome. So.
Yeah, and I think part of it is that some people find it crazy that high schoolers are in the industry as a whole. So it's just like they haven't even wrapped their mind around it, which has caused them to, I guess, take away from what we're actually doing.
No, that's fantastic. I think what you guys are doing great. We're going to take another quick break. You're listening to Master Your Finances. Welcome back. You're listening to Master Your Finance. I'm with Abhijay and Rithanya, and we're talking about venture capital and the fact that now high schoolers have their own fund, which I think is awesome. Obviously, there's some oversight there with Ben of 1435 Capital. So you guys are really being trained on how to do a lot of the preliminary due diligence and do a lot of the screening. And in some ways, I think it's interesting because your age segment actually has some advantages, right? And people may go right to the disadvantage. You want to talk about maybe what you're hearing as far as I know you can tell about your advantages and what are people think your objections are that are coming up that you're hearing.
Yeah, of course. So I would argue that in a way that we're probably like a safer option in terms of our fund, because again, back to the high schooler thing, is that first we are more likely to take risks on, I guess, products that other investors might see as non-viable. And along with that, you have to also realize that we've had a lot of experience as actually venture analysts at 1435 Capital Management. So everything that we're doing with this fund, we've already done. And again, something that we really want to emphasize is that we have Ben behind us who is also making sure that we are making the proper decisions and doing the proper outlines. Because again, we don't know everything to venture capital. We're always learning and we're always trying to absorb as much into the process. So having Ben behind us has us as that credibility along with that risk taker aspect.
Yeah, and especially since we're newer to this space, I definitely think our relationship with these founders are definitely mutually beneficial. As much as, we're helping them in, their product development and, raising funding, we're also learning from them, like what their industry is and like what their experience is. And, we're both like helping each other out and getting this industry knowledge from each other. So that's, I think, definitely like more emphasized in a younger fund, a younger people run.
So what
fund.
do you think might be a slightly different focus maybe in a fund run by younger people as opposed to maybe some of the bigger entities that Ben is running as well?
Yeah, so I think that a main thing is that we're actually open to high schooler startups as well. And that's really big because I think a problem with like pitching something as a high schooler or being a high school investor is the fact that no one really takes you seriously at times. And so having the opportunity to help out other high schoolers, as well as, of course, the startups that Ben works with and everyone works with, allows us to really shine a light on maybe individuals that haven't gotten as much support, but have a great product. And I think that openness that we have to explore into different career paths or different ideas is really going to set us apart from everyone else.
And being born in this technology era, we're also able to kind of see like, hey, these are some problems that we see that are coming up, just because like of our youth and, our age and what demographics we're in, which is unlike most investors. How many investors are you finding that are literal teenagers?
Right.
So we also kind of have that, perspective as well.
You see a wider scope on what's going on for the younger people. So I think that's awesome. Yeah. So if you're going to sell to a niche, you want to have somebody that's in the niche to help you advise you on like what's actually happening on the ground, right? So this is getting ready to start up, right? It hasn't actually launched yet, right? So where are you at? Have you started reviewing companies or like what are you at or how's it going to roll out from here?
Currently, we are raising funding. We're currently raising our first seed round for so that we can hopefully deploy by 2024. And we're going to various pitch channels and events to pitch to other investors, talking to them one-on-one, kind of just getting our idea and also getting feedback from them. Like, how can we, bring our comparative advantage? Like, what sets us apart from other funds, especially, leveraging that age aspect.
But a little more into the future of things, after we raise the money that we want to raise with this product, we're going to start deploying capital. And that means doing exactly what we've been doing for like this past summer, reaching out to different companies, looking at different pitch events and seeing who is viable and who is someone we can invest in so that we get higher returns. So again, like we've mentioned time and time again, it's the fact that we've already done this and we're replicating this. And I think a quick thing is that if you really want to hear more updates or are really interested in this, we actually have an Instagram, which you can probably follow to see more updates and to see new opportunities that we are trying to explore in.
All the Fortune 500 companies, they also started at a young age. Those founders started when they were like in their 20s, And I think the biggest thing for getting them to kickstart their company is having a team behind them. So we really hope to, be that for a lot of the companies for tomorrow.
That's cool. What was the Instagram thing? You didn't tell us.
At Homeroom Fund.
At Homeroom Fund. You had to help us out there.
Yeah. We definitely want you to follow because there's like, even if you're maybe someone who wants to start a startup, we will be definitely ready to listen to you. And we also have a website, homeroomfund.com.
Okay.
We centralize our deal flow there, so you can also apply if you're interested in, having a conversation with us.
Exactly.
So is this the first in the nation as far as, I've never heard of this before. Are you guys first or are you just one of the few?
So we don't know if we're the exact first, but we are like really early on. And that's really, we're taking a risk with this, which is again, back to what we're doing. And we're trying to maybe make a change because our goal here is not only to make money, but to really bridge that gap between high schoolers and the venture capital industry as a whole. And to make sure that that kind of opportunity in this industry is more accessible to as many people as possible.
Yeah, and we're learning so much every step of the way. So we're really excited to get into this project.
So are there any, because you guys are high schoolers, but you're not going to be high schoolers forever. So what about 5 years from now?
Yeah.
What happens then when you're no longer high schoolers? Are you bringing in other, how do you keep the youth in this decision making? Because that's your advantage, right?
Right.
But 10 years from now, you're not going to be the same age. Probably, most likely.
Yeah, so they are vintage funds. So we do every year we do hope on like bringing more people onto the team and expanding, and having people in different locations also, because the more people, it's like the more eyes we have on this and more like different perspectives that we get in on the team, and we really do hope to scale that way.
We actually hope to have maybe a full circle moment in actually hiring our own interns. We've had the opportunity to start this fund because we've been interns with 1435 Capital Management, but really taking that opportunity that we've gotten and maybe expanding it to as many more people as possible. Because again, this internship experience has given us so much valuable knowledge and opportunities. And if we can give that to even one more person, that would just be one more person helped and maybe just a chain reaction to as many people as possible.
See, I'm viewing this as like some of these big colleges like the MITs of the world that like do research, and you're just starting now 4 years younger is what it sounds like to me.
Exactly.
Yeah.
I mean, it's the same concepts have been around forever. In fact, some of the most desirable colleges in the country are known for their research aspect of what they do, whether it's medical or technical or whatever it is, right? So you guys are really just bringing the age down a couple of years.
Right.
Yeah.
With a similar model, what's already been proven out, you're just a different age group.
Yeah, and I think we're pioneering this idea as a whole in the terms of an opportunity. And who knows, maybe in 10 years, the new normal would be high schoolers owning their own venture capital fund. And it's we just hope to show that this is a viable thing to do so that we can maybe have the idea expand as a whole.
Also expanding these opportunities for high schoolers, a lot of students who are interested in going to finance, there's so much to finance. There's VC, private equity, investment banking, and just showing them that there's more opportunities like that, because internships for high schoolers have definitely increased a lot in the last decade. You see a lot of high school interns interning at marketing places and in research, health sciences, but you don't see that many opportunities for finance because there's a lot of risk that comes with taking on younger people. So hoping to set this as the norm, the social norm, that having high schoolers on behind that process.
Yeah, because the other part we didn't really talk about much is you're not 18, right?
Nope.
Yeah, I know.
So you're minors, so that has a whole different aspect. So somebody else that's an adult, quote unquote, from a technical standpoint, has to be making the final decision, correct?
Exactly.
I mean, you can't, as minors, everything has to be held in trust for you. I mean,
Right.
even no matter what you're doing, right? Somehow it's got to be held for you at this point. So that's part of the structure that's being set up, I'm assuming, right?
Right. So I guess the structure that we're going for is really for the actual fund to be managed by high schoolers, but again, have that experienced oversight. And we, along with Ben, we also have another venture partner who's there to help us out and to, make sure that every process or every decision we make is justifiable or is something based on their experience.
So of some of the companies you've seen already, what are some that you think you might have been interested in that maybe the bigger companies were like, well, that's not necessarily for our... Is there anything like that you're seeing out there? You're like, well, that might be something we want to take a look at, because you've already been out there looking around, right? So what are your thoughts about that?
Yeah, so overall industry aspect, we're kind of focused on technology, fintech, CPG, retail. And yeah, we kind of stray away from health sciences, life sciences, because that's not necessarily our area of expertise.
Okay.
But we've definitely been looking around at different pitch channels. We're focusing on raising funding, but definitely keeping an eye out for those up and coming companies.
Also, a little more into the nitty gritty, to specify that, I think something that we as high schoolers or as the youth probably have more of an advantages in things like social media, having new platforms, because again, we're talking about maybe some experienced investors might not have as many opportunities or as much knowledge about the field, but as high schoolers, we're ones to actually use social media,
right,
and to see what works, what doesn't work, and what do we want to see in it.
Yeah, I heard Facebook's for old people now. That's what I
Not that old.
Yeah.
I still have Facebook.
No, I know it's funny that young people don't go on Facebook, only their parents.
Yeah, and we see the youth, definitely get influenced by influencer marketing and social media marketing. That is, in this technology era, that is how brands are reaching out to us. And it's definitely more of a psychology aspect more now than ever.
And that's definitely something that we can contribute, right? Because we have experience in marketing and social media and what works and what doesn't work for the youth. And we can make those applicable changes to ensure that the company sees the profits and the returns they want to see.
Well, that's just awesome. You guys have been fantastic. So any other final thoughts before we sign off here? It's been amazing.
I think that something that for like maybe like high schoolers or youth out there is to don't be afraid to seize the opportunity, because at times the world might be telling you to this is only for adults or high school or like past high schoolers, but make sure to seize every opportunity and to really absorb as much knowledge as possible, because you don't know who you're going to meet.
And yeah, it's definitely scary entering into a space with a lot of adults, but you know, we're young and that's like a risk we can take on right now. So, you know, there's especially like, don't look at your age as a disadvantage, but something that you can leverage to make yourself unique. And yeah, I definitely agree with everything Abhijay just added on.
That's been great. You've been listening to Master Your Finances. You can go to masteryourfinances.us and subscribe and like. Thank you very much.